Good afternoon to you all accounting dolphins. My name is Abram and today it is Team A Squared in the building. Ashraf is in the building. How are you, Ashraf?
Good, AB, and are you okay today?
I'm okay, I'm feeling good.
Brilliant.
How are you?
Fine, thank you. Just ready to get on with the accounting.
I can't wait for the show. I'm so excited. And already I actually posted a picture of you on our Facebook page, getting ready for the show. And already people are like, we tuned in by Lente and Rosie Pali saying we can't wait for the show. So guys, welcome. Let's do this. What are we doing?
Today we're looking at the cash flow statement and ratio analysis. Now guys, what is important for you to take note of is the fact that these two, you will notice when you're looking at your exam papers, AB, you find that with the cash flow statement, you find ratio analysis coming in within the question. And that's what learners need to take cognizance of, because one is the cash flow component and the other is your ratio or your financial indicators, which you have to learn, comment, and know how to use them.
Nice one. So it's a great exam tool to know.
Absolutely.
The earlier the better.
Correct.
Right, guys, to join us, send through your questions and your comments on our Facebook page. It's facebook.com/LearnExtra, XTRA, or also follow us on Twitter @LearnExtra. Guys, I'd really love to get your comments and your questions because Ashraf is ready, guys, to answer you guys. The notes that he's going over, I've already posted for you guys on Facebook, so do get them, download them, or view them. If you can't see them on Facebook, go to our website, which is learn.mindset.co.za. And remember, guys, you can get yourself our workbook. It's only 139 Rand. Simply email sales@mindset.co.za. It's a great solution which has questions, answers, and other study tools to help you pass. That's what we want from you guys. Ashraf?
I want to correct you there, AB.
Yes.
We don't want them to pass. We want them to get 90% plus.
Okay, we want you guys to get 100% plus.
Thank you very much. That's the one. Okay, guys, let's go on to the cash flow statement. Now, a quick summary. When you're looking at the cash flow statement, what are you looking at? What's the purpose and objective behind a cash flow statement? Remember, it talks about the cash within an enterprise during a specific accounting period. We're looking at the cash inflow and the cash outflow. Got it, guys? We're talking about cash being generated and cash being utilized. Right. And then also one of the stipulations of the Companies Act is that the company has to provide in its financial statements, as part of its reports to its shareholders, it has to provide a statement of comprehensive income, which you know as the income statement. It needs to produce or prepare a statement of financial position, which is your balance sheet, and it needs to produce and prepare as part of the financial statements, the cash flow statement. Now, very often, when it comes to the cash flow statements, then all of a sudden, you go all worried and full of fear. But remember grade 12s and 12B, remember you guys what I said? Don't fear when Ashraf is near. That's the one, AB. So guys, pay attention. See how we approach the cash flow statement, because that will then give you a perfect idea of how to answer a cash flow statement. Okay, getting on with our notes. What do we want to know? Number one, when you're looking at the cash flow statement, primarily, you're looking at operating activities, you're looking at investing activities, and you're looking at your financing activities. So the three components of your cash flow statement would be operating, investing, and financing. A cash flow, guys, is about structure. Structure yourself. Make sure that your planning is in order. So you will see, when I'm looking at my operating activities, what am I looking at? Primarily, what's the source of cash for any business, right? It involves the buying and selling of inventory, receipts from debtors, payments to creditors, payments of expenses, etc. So within the operating component of my cash flow, that is where my focus will be. When it comes to investing, what am I looking at? I'm looking at the cash changes. Remember, at all times, ask yourself, what's the impact on cash, on bank? Right, so this means that we're looking at the buying and selling of tangible assets, buying and selling of tangible assets. We're also looking at the changes in our investments. In other words, it's limited here to your fixed deposit, and you ask yourself, did I place a fixed deposit or did a fixed deposit mature? So guys, clearly, when we're talking investing, we are structured. That's all that we look at. Buying of tangible assets, purchase of tangible assets, the sale of tangible assets, and we're looking at the investments either being placed or matured. Right. Now we come to financing activities. Where is our emphasis? When we're looking at financing activities, what do we focus on? What's the area that we're paying attention to? One, we're looking at the paying off loans or receiving of loans. Yes, either we are receiving a loan or we're paying off a loan, and we are also looking at the issuing of shares, not forgetting the repurchase of shares. Please, grade 12s, make a point, make a mental note. When I'm looking at my ordinary share capital, I'm looking at one, the issuing of shares, which is a receipt, obviously, I'm receiving money. And number two, the repurchase of shares, where we are buying our shares back from shareholders, obviously an outflow of funds. Keep that in mind. Right, let's go further. Now, if we have to summarize this in terms of where's the money coming from? What's my inflow of cash? Remember, under operating activities, money received from sales, money is received from other incomes, okay? Keep this in mind. That's the area in which you're going to be operating. Obviously, this tells you that the emphasis here will be your income statement or your statement of comprehensive income. Think about it. Most of the information that you require would feature there. However, there would be other parts that you would refer to as well. Then, amongst the outflows, where would you paying? Where would the moolah be leaving the bank account? Certainly, guys, if money is paid for stock, paying of expenses, paying your income tax, paying your dividends, all of that is restricted to the cash component. Remember, you are preparing the cash flow statement. And when you prepare a cash flow statement, you think cash. I'm looking at the impact on my bank account. I want to know, is there an inflow of funds or is there an outflow of funds? Is money flowing into my bank account, which is being generated, or is there an outflow of funds? Is money being utilized in order to decrease my bank account? Right. When it comes to your second component, which was your investing activities, we're talking about monies received from the sale of the asset. Right? Now, please listen carefully. Don't look at the show and go back and say, but this is what Ashraf said. Guys, when it comes to the cash flow statement, we will dispose of the asset at carrying value. But that's limited to the cash flow statement. Anywhere else in the curriculum, you would dispose of in the normal way, where you make a profit or a loss on sale of asset. But when it comes to the cash flow statement, we will always dispose of the asset at carrying value. That means no profit or loss on sale of asset. So that's what we want to know. How much did we sell that particular asset for? What was the money that was generated? Watch the terminology. I'm generating cash, there's cash coming into my business. I'm utilizing cash, there's an outflow of cash. Okay, then with regards to inflows, if a fixed deposit matures, certainly the investment has matured, the money is coming back into our bank account, an inflow of funds. Right, when it comes to the outflows, where's our emphasis? Watch. When you purchase more tangible assets, it means that there is an outflow of funds. Why? You're buying. The bank account is decreasing. So definitely money that is paid for replacing our tangible or our fixed assets. Watch. When you buy new assets, same story. And the last one is when we are investing money into a fixed deposit. In other words, you're taking money from your bank account increasing your fixed deposit. When you do that, you are taking money out of your bank account, which indicates that there has been cash utilized. Okay, keep that in mind. When it comes to my last component, which is my financing activities, I'm looking at money received for the issuing of shares. I'm selling more shares to the public. I'm receiving money, an inflow. When I am receiving or obtaining a loan, my loan account is increasing in value. What's happening to my bank account? My bank account, when I'm receiving the loan, my bank account is increasing, indicating an inflow of cash into my bank account. How would it impact when I repay my loans? Watch, when I repay my loan, it means that there is an outflow of funds. The money from your bank account is being used to repay your loan. Your loan is decreasing in value. Your bank account is decreasing, indicating an outflow of funds. Very important one. Money used for repurchasing shares. Watch this one here closely. When we repurchase shares, it means that money is leaving our bank account. Now, which amount are we talking of? Because remember, we've done this in the past in our previous lessons. We've spoken about the average price and the price above the average price. So now, when you are doing the cash flow statement, what do we use? We use the price, the average price, one component, plus the price above the average price. The two added together would be my bank figure. Do you recall from your lessons? Think about your ledger accounts. You had two bank entries, one in ordinary share capital and the other in your retained income. That's right, grade 12s. Those two bank accounts would feature in your cash flow statement because that's the amount of cash that is leaving your business. Keep that in mind. Okay, now, if we look at, when we're looking at the changes in working capital, remember, I'm going to teach you some German today. Amy is looking surprised. German in accounting? That's right. Look at this acronym and remember it and use it. How you pronounce it is entirely your decision. Ayulich sounds German. We call it German. What does it mean? That's important. When an asset increases in value, we are utilizing funds. Think about it. If you're comparing your inventories, watch. Yes, this one is important, grade 12s. I refer to it as the love arrow. If a love arrow is misdirected in your lives, it creates chaos, eh? Remember that, eh?
Yeah.
So now, in accounting, the same applies. Make sure you identify beginning of the year, end of the year. Look at the direction of my arrow. Ask yourself the question, what happened to my inventories? They were 100,000, have increased to 250,000. That means we used cash. Money has been utilized. Watch, when an asset increases in value, we are utilizing. Notice this U tells you that the answer has to be in a bracket. Watch, the U indicates the shape of the bracket. Easy way to remember that. So whenever you are doing your comparisons and you want to use this acronym, make sure you write it on your paper so you remember. When an asset increases in value, we are utilizing funds. And when a liability increases in value, we are generating funds. That's right. Okay. And then, just before the break, we're going to teach you some French. Maybe? French? Okay, try this one here. Aide gledu. What does this mean? When an asset decreases in value, we are generating funds. And when a liability decreases in value, we are utilizing funds. Just watch this here. Look at the interesting part here. Watch the direction of your arrow. Can you see? 214 to 213. So this is the end of your year, and that's your beginning of the year. So make sure that this arrowhead is in the right direction. Here you can clearly see it's in the incorrect direction. Why? Your beginning is 213, Or either way, maybe the dates have been changed, but if we do this year, if we change that to 214 and that to 2013, what we wanted to show you was that if your inventories were 170 and they decreased to 100, it means when an asset decreases, we generated, notice, a positive 70,000 Rand. Guys, we've done an overview of the cash flow statement. We'll be back in a flash.
Thank you so much, Mr. Ashraf. Guys, you heard it for yourself that if error is missing in your life, you need some direction. And now we've got an exciting competition that I'd like you guys to take a look at during this break. I'll tell you more about it after it. Welcome back, guys. Now you've seen that winning is very easy and you could be that winner. All you need to do is to fill in the entry form that we have on our Facebook page. It will direct you to the website form that you need to fill in. It's very simple, guys, and you could stand that chance of winning 1 year of free accommodation at South Point. Now, Ashraf, I've got this question for you.
Go for it.
Kevin Nakana says, why we don't include SARS in note 1 of the cash flow statement?
Very simple, guys. SARS income tax has a note of its own. Therefore, we exclude it in note number 1. And the reason we do that is because you will see it has a dedicated note for itself on the face of the cash flow statement. So it's no state secret. You just exclude it in note number 1 because it has a note. It's a standalone. It has a note of its own on the cash flow statement.
Okay, here's another one from Mbalente. Can Ashraf differentiate for me between repayments of long-term loans and proceeds from long-term loans? What is the actual difference between the two?
Very simple. Guys, the repayment of your loan is when you compare your loan account at the beginning of the year to your loan account at the end of the year. You make a comparison and you ask yourself, did my loan increase or did my loan decrease? Now, very simple. If your loan has increased, it means that we took a further loan. It means that we generated cash. Money came into our bank account. So if your loan increases in value, it means you got more money. On the other side, if you look at a decrease in your loan account, what does it mean? It means that you repaid the loan. And when you repaid the loan, it means that cash has been utilized.
Awesome stuff.
Good.
Let's continue.
Okay, guys. Okay, the question is a practice question for you based on fixed assets, cash flow, analysis and interpretation. You are given information regarding Classico Limited, and the first question says, what is the main purpose of a cash flow statement? Now, voila, you should be answering this already because we've discussed it in the previous segment. Very simple. Let's do the answer to this here. What is the purpose or the main purpose of your cash flow statement? Is to determine your inflow and outflow of cash. Okay, so in other words, you want to know what was the sources of your cash, where did the cash come from, what was the inflow, so that's your source of your cash. And number 2, you want to know where was your cash applied, where was your cash spent, how did you spend the cash? It's based on your outflow. So in other words, in this question here, primarily we are checking to see, do you understand the reason behind a cash flow statement? What is the main purpose of a cash flow statement? In other words, it also tells you that if you look at your bank account, you want to know what was my inflow of cash and what was my outflow of cash. Clearly you can see that your cash flow statement explains to you the reason for the change in cash and cash equivalents. Got that? Right, let's move on. The question says, refer to the fixed asset note under information C and calculate the missing amounts indicated by A, B, C, and D on the fixed or tangible asset note for the year ended. Right, so if I look at my note now, and I see my information, and I say, the first one is A, year goes. I'm looking for my disposals at carrying value of land and buildings. Now that's the easy one. That's the easy one. Why? There's no depreciation to take into account. You just merely compare your opening balance with your closing balance. Let's do that. My carrying value at the beginning of the year was 3 million rand, and my carrying value at the end of the year was 2,500,000. Clearly you can see that you disposed of land and buildings, and immediately this tells you that in this one here, your answer is 500,000. And obviously your workings, which you must show, important. We're not going to do the workings now, obviously, because we know. Okay, let's do it. It will be your 3 million, right? Minus your 2,500,000. Clearly you can see what happened there was a decrease in your land and buildings, indicating that you sold property to the value of 500,000 rand. Next question. We now have to work out component B. My depreciation on my vehicles. Right. What do I know? What do I know in terms of my information? I know that a vehicle was sold at its carrying value on the last day of the financial year, right? So in other words, you had used that vehicle right up until the last day of the financial year. Got that? Okay, now this means therefore that when I'm calculating my depreciation, I must calculate my depreciation at 20% per annum on the diminishing balance method. And look at your additional information. They also told you land and buildings were sold. Remember the previous one? There's additional information, just making sure that you don't leave that out when you are doing your comparison. Okay, coming back to my vehicle. So, if I sold a vehicle on the last day of the financial year, going back to my information, let's see what I have here. I'm told that my carrying value at the beginning of the year was 660,000. Do you see that? Given information, I need to calculate depreciation at 20% per annum on the diminishing balance method. I also know that this disposal of mine took place on the last day of the financial year. In other words, 660,000 worth of vehicles was used for the entire accounting period, for the full financial year. Got that, guys? So therefore, if I do my calculation, this is what I'm going to say. It's just 660,000 times, remember art? You remember art? Discussed with you at length about art. And I'm not talking to you about drawing a sketch of AB as he's sitting and presenting. Certainly not. I'm referring to amount, rate, and time in your calculation. The amount is 660,000. My rate is 20 over 100. And my time is 12 over 12 because I use that for the entire financial period. And if you calculate that, it should give you a figure of 132,000. Let's check. It's your 660,000 times 20. 132,000. Voila, there's my figure. 132,000 is what? My total depreciation that I have to write off on my vehicles for this financial period. Got that? Okay, good. Let's go to the next one. What do they want in C? Let's check. In C, they're telling us here that we have to calculate the disposal at carrying value. You want your disposal at carrying value. Now, once again, let's look at this calculation in perspective. You're going to take your carrying value at the beginning of the year, your carrying value at the beginning of the year. You're going to bring in your depreciation. You're going to bring in your additions at cost. You're going to bring in your disposal at carrying value. And then you're going to bring in your carrying value at the end of the year. Now let's see, in respect of this table here, what information do we have? Remember, we calculated this to be 132,000. You recall your depreciation calculation? Right. My carrying value at the beginning of the year was 660,000. Also, let's look at the information so you can see that all this information is given to me. Right? There's my carrying value at the beginning of the year. My carrying value at the end of the year was 446,000. Let's slot that in. My carrying value at the end of the year was 446,000. I am also made aware that if I look at my vehicles, if it says addition at cost was 0, that means no new vehicles were purchased. Okay, that means therefore, if I look at this note once again, additions at cost 0. Remember, depreciation is a negative, right? Now look at that calculation. 660,000 minus 132,000, let's do that. 660,000 minus 132,000 is equal to that, minus 446, 1, 2, 3, and the figure is 82,000 rand. What does that figure represent? That figure represents your disposals. What was that figure once again? 82,000 rand. 82,000 rand was your disposal at carrying value. Look at the layout. Look at how I use my note number 3 on tangible assets to calculate, in this case here, the disposal at carrying value. Okay, the next one that we had to work out. So we've worked out this one for you was 82,000 rand. Let's look at the next one that we have to work out. What are we expected to work out? D, right? And what is it that they want at D? They want the carrying value at the end of the year, right? So once again, let's do a calculation here. Let's just do the calculation on this page here so it makes it easier for us. So if we're looking at the information on hand, our cost price at the end of the year is 258,000. Okay, so if that is my cost price, 258,000 at the end of the year, right? What do I know? Let's look at the information. What information do I elicit from here? I am told that I purchased equipment to the value of 48,000 rand. Can you see that? You bought equipment to the value of 48,000 rand. So clearly, if you come back here and you say minus 48,000 rand, okay, this will give you a figure of 210,000 rand. What's the 210,000 rand? The cost price of your equipment when? At the beginning of the financial year. Right, watch this here now. If you take your 210,000 rand, which is your cost price at the beginning of the financial year, let's put that figure in, 210,000 rand, you can clearly see, no, that's in the wrong place. Let's just correct it. The 210,000 is the cost price of your equipment at the beginning of the financial year. What else can you see? What other information can you get from here? I'm showing you different methods in which this question can be answered. Watch. If my accumulated depreciation at the beginning of the year was 52.5, right? And I had depreciation of 55,500 for the year. This tells me something, doesn't it? Let's take those two figures. 52.5, that's 52.5 plus the other figure that I've got here is my total depreciation for this year, 55,500. 55,500. Let me add 52.5 plus 55,500. 52,500 plus 55,500 is equal to 108,000. Okay, what's the 108,000? Clearly you can see. Watch my note. The 108,000 would be my accumulated depreciation at the end of my financial year. So 258 minus 108 would be here goes 150,000 rand. What's the 150,000 rand? The 150,000 rand is my carrying value for my D, and therefore I can go into my answer and show this figure for D as 150,000 rand. It's a very ugly 150,000. Let's make it a bit nicer. There we go. 150,000 rand. So clearly you can see that the question is testing your knowledge of your fixed assets in terms of asset disposal and the compilation of your note number 3. In other words, here, your fixed or tangible asset notes had some missing figures which you had to calculate. Okay, let's move on and ask ourselves, what's the next question? The next question said, complete the cash flow statement for the year, showing all your workings in brackets. Now remember, the format of your cash flow statement in this particular example, you are given your cash generated from operations, a given figure. You are given your interest paid, a given figure. You now have to calculate your taxation paid. Right. Now, to calculate taxation paid, watch what we do. SARS income tax. Step number 1, what do you look for? You look for your opening balance. Now, let's look at my information. Do I have information about SARS? Let's look at it here. Can you see? Again, remember, beginning of the year, end of the year. The love arrow, important. SARS income tax at the beginning of the year was a 27,500, appearing where? Under trade and other payables. This means that it was a liability. So immediately, what I want you to see is, if somebody asks you the question, what type of an account is SARS income tax? What will your response be? Your response will be, it depends. That's right. It depends on what? On whether SARS income tax has a debit balance appearing under receivables. There you can see it. There's your 22.5 at the end of the year. And if you look at your SARS income tax at the beginning of the year, it appears under my trade and other payables. There you can see it as a liability. So therefore, what type of an account is SARS income tax, grade 12s? It depends. Don't stray or go away. Back in a jiffy.
It depends. Well, guys, if you're between the ages 18 and 24 and you've got what it takes to inspire others with your story, enter the Future Stars Awards and you could win big. So let your dreams take a flight. As you dream it, believe it, and do it. We'll see you after this break. Welcome back, guys. If you think you are a Bright Spark, enter the Be a Bright Spark competition and stand a chance of winning a cool Chevy Spark L, just like Dimakato, who has already won 1 car. So 3 more cars to be given away, and entering is very simple. 1, you need to buy yourself a Safeway's K53 book or download the Cool Android app, which is available from Samsung Galaxy Store or the Google Play. Secondly, fill in the entry form on our website, on our Facebook page, facebook.com/learnextra, and also like the Safeways Facebook page. And lastly, share and stand, keep your fingers crossed, and you could be that winner. Ashraf?
Yes, let's fly with the questions.
Let's fly with the questions. Okay, there's one now from Mindset, from Uviwe Nolutando, saying, apart from depreciation and interest on loan, what else could appear in Note 1 as an adjustment to profit before tax?
Nothing else. There are other non-cash items which are not examinable, so you don't worry about it. It's not in the ambit of your curriculum. Don't worry about it. All that you remember is you add back depreciation. Reason, it's a non-cash item and it must be added back because no moolah is changing hands. Right, and number 2, you add back your interest expense. Reason, because it is not an operating expense but a financing expense. Interest is different. Watch, if you see this here, you will notice that, just to show you, that can you see here, you're subtracting your interest, although here it's a given figure, you're subtracting your interest. So, when you edit it back in note number 1, this is where you're going to subtract your interest. Reason, it's not an operating, but a financing expense, and this is where it belongs.
I love your answers today.
Thank you.
Nothing else, it depends.
That's it.
All right, let's continue with your questions.
Let's carry on, guys. Okay, we're calculating taxation paid. What did we say? We said that if we look at our information, number 1, let's go back. Look at my SARS income tax at the beginning of the year. So that is the arrow direction. That's the beginning of the year. That's my end of my year. Okay? So now, at the beginning of the year, my SARS income tax appears under trade and other payables, 27.5. Okay? Let's do that. 27,500 as my opening balance. Proceed here. Look for my opening balance. Step number 2, look for my closing balance. Where will I find SARS income tax at the end of the year? Once again, SARS income tax, watch. Trade and other receivables has SARS income tax at the end of the year. Once again, beginning of the year, 22,500, meaning that it's a debit balance at the end of the year. Important, 22.5. Watch now. 22.5 debit balance, 22,500. Now think that that is above the line, which will be brought down as a debit balance. So I've got my opening balance, I've got my closing balance. Proceed here. Step number 3, what was my income tax amount? Let's see. Am I told what was my income tax for the year? In my given information, what am I told? There goes. Income tax for the year, obviously, from your income statement, 375,000. Therefore, you include your income tax of 375,000, and this now gives you your calculation that you need to prepare for your SARS income tax. What is the calculation? Watch it, guys. Watch my calculation. 27,500 plus 375,000 plus 22,500. Let's add. So we've got 27,500 plus 375,000 plus 22,500. This will give me a figure of 425,000. What is the 425,000? The 425,000 would be your taxation paid, 425,000 rand. And yes, what you would definitely do, you would show that calculation in your bracket. Got that? Good. Now, we have to calculate our dividends paid. Ashraf likes to make your life easy. I'm going to show you a shortcut to calculate your dividends paid. Remember, you have to maybe draw up two T accounts, ordinary share dividends and shareholders for dividends. Yes, depending on the question. But the shortcut, something to remember, when I'm calculating dividends paid, what do I look for? This is what I look at. Watch. I look for last year's final. Now, where do I look? Obviously, I need to find it in a certain place. Now, shareholders for dividends. Unlike your SARS income tax, shareholders for dividends is a liability. Therefore, where will I find it? I will find it under my trade and other payables. Now watch. Last year's final, 385,000. That's the figure that I'm looking for. One of the components that I will include under my dividends paid would be last year's final, 385,000. So immediately, I say, open my bracket, 385,000 rand. What is that? Last year's final. What else do I look for? I look for this year's interim. What am I looking for? This year's interim. Let's look at the information. Am I told what it is? I'm sure there is some information about my dividends. Aha, there goes. The dividends, interim and final for the financial year amounted to 825,000 rand. Again, giving me information. The total dividend for this year was how much? 825,000 rand. That's the total dividend, guys. Now, if I know what my final dividend was, I can then calculate my interim, can't I? Certainly I can. Let's do that. My final dividend was, check my information, 450,000. There's the final dividend for this year, 450,000. So what do? I say, fine, take my 825,000 minus the final dividend, which was 450,000, minus the 450,000, and this will give me a figure of 375,000. What is the 375,000? The 375,000 rand is this year's interim dividend that was paid. Please keep that in mind. Dividends, last year's final plus this year's interim, 375,000. Immediately, I go into my answer and I include 375,000 rand. Clearly you can see, you add the two figures together, which is 375 plus 385,000 to give you your answer of 760,000 rand. What is the 760,000 rand? That is your dividend paid. Okay, now under investing activities, what am I looking for? Come, you're supposed to be shouting out the answers. And the answers are, 1, you're looking for the purchase of tangible assets, right? And you are looking for the disposal of tangible assets. Now, let's go back to my information. Again, I can calculate, watch here. In terms of my additions at cost, there's a purchase of my tangible assets, the 48,000 rand. Okay? So that was my purchase. Was there a disposal? Yes, we calculated our disposal. Can you recall? It was the 82,000 rand. There was a missing figure there. That's one component, which is the 82,000 rand. But I also sold land and buildings here. So A plus C would give me my disposal of tangible assets. If you remember, it was the 500,000 for land and buildings and the 82,000 for my vehicles. So the 582,000 would be my proceed of my disposal. So what are we saying? We are saying that with the purchase, you would indicate your amount that we purchased, which was the 48,000, and under the proceed, you would indicate the figures that we just mentioned now. Let's look at our financial asset. Is there information regarding our financial asset? Let's see if we have anything there. We've got our current assets, which is inventories, receivables, share, retain, loan. So no information regarding the financial asset, so you simply do not take it into consideration. If you had a fixed deposit as an investment, you would do the comparison and determine whether there was an inflow or an outflow of cash. It would impact under the section on the investing activities. Right, when it comes to financing now, what are we looking for? When it comes to financing, we're looking at one, the share capital. What happened to share capital? Again, important information. Let's check. What are we told? Ordinary share equity, they say, watch, ordinary share capital, CF. So let's go to F. What do they tell us in F? They say, ordinary share capital at the beginning of the year amounted to 700,000 ordinary shares with a total value of 3,150,000. That's the share capital at the beginning of the year. What happened? On the 1st of November, 50,000 additional shares were issued at 6 Rand. Okay? Meaning what? If you take your 50,000 times the 6 will give you a value of 300,000 Rand. What did I do? I took my 50,000, multiplied it by 6 Rand to give me a value of 300,000. That's the proceeds of my shares that were sold. Right, now, there were no further changes to share capital. Important, important, important. Why? Because, like I alluded to earlier on, grade 12s, I'm begging you, don't take for granted that you can merely compare your share capital at the beginning of the year to your share capital at the end of the year. In this particular case, yes, you can do that. Watch. It was 3,150,000, is now 3,450,000. If you do the maths and you do the subtraction, you're going to get a figure of 300,000, which tied in with the shares that we sold. But can you always do this? And the answer is no. Why not? Because if they told you in this information of your share capital that shares were bought back, that means that in your share capital account, and I think I have to explain this to you because of its importance. Notice, in your ordinary share capital account, in your ordinary share capital account, you've got an opening balance, right? You've got a closing balance. You also have a bank figure here, in this particular example, of 300,000 Rand, indicating to you that you sold shares to the value of 300,000. But the moment there is a repurchase of shares, you have to bring in this bank component as well. Not applicable to this question, but definitely it's something that you must take cognizance of. Why? Because if there was a repurchase of shares, you have to indicate that bank figure as well. Now, this is not the only figure that's going to impact on your cash flow statement. The bank figure that appears, remember, in your retained income account, you have a bank figure here as well. Clearly you can see these two bank figures. Which two? These two bank figures must be added together for cash flow purposes to determine how much of cash actually left my business. Okay, coming back to our question. So you can see that in your cash flow, you've now done your proceeds of your shares, which would be the 300,000. And then you would also look at your loan account. Let's see what happened to my loan. If I look at my loan account, there's my loan at Freeport Bank. Okay, once again, remember your arrow so you know your comparison is correct. Indicate your arrow. It was 1,375,000. That was the value of your loan at the beginning of the year. The value of your loan at the end of the year is 2 million rand. Immediately you tell yourself, right, take the two figures, 2 million minus 1,375,000 will give you a value of 625,000. Now ask yourself the question, what happened to your loan? Your loan increased. Watch. It was 1,300,000, is now 2 million. There has been an increase in your loan to the value of how much? 625,000. This means that there has been an inflow of cash to the value of 625,000. Obviously, that is what you would slot into your cash flow statement. 625,000 rand. Remember, both are inflows, and obviously the total would be 925,000 rand. I'm not going to go into showing you all the figures. You can do this for yourself. What I want you to take particular notice of is once you have your operating activities, 2, you have your investing activities, and 3, you have your financing activities. Those 3 components must be added together. That will give you your net change in cash and cash equivalents. You now bring in your cash and cash equivalents at the beginning of the year, your cash and cash equivalents at the end of the year, and the difference between these two has to correspond with that figure there. You then know that your cash flow statement is correct. One more thing. When you are doing this comparison, pay particular attention to a bank overdraft as well as cash and cash equivalents in the same year. Is that possible? Certainly it is. A company can have a bank overdraft, but it may also have cash and cash equivalents in the form of cash float and petty cash. So take the net effect of those two to determine your cash and cash equivalents either at the beginning of the year or at the end of the year. Guys, again, we didn't get time to come to our theory questions. Once again, just to give you a brief on your calculations. One is to be able to do your financial indicators. I repeat, one is to be able to do the financial indicators. It means do the asset test ratio, do the debt, learn those ratios. There's no shortcut to that one. You have to learn. But more important, refer to your past papers and look at the comments that you have to make regarding those financial indicators.
Thank you.
Very, very, very important. Guys,
we've
time
run out
to
of
say
time, unfortunately.
goodbye.
Thank you so much, Ashraf. We really appreciate you, and we're so privileged to have a teacher
Only a
like you.
pleasure.
You
Only
make
a
learning
pleasure.
so fun. Guys, thank you for watching, and thank you to the Department of Basic Education for proudly bringing this show. We love you. Peace.